As India prepares for a major shift in its tax landscape with the new Income Tax Act coming into effect from April 2026, businesses, professionals, and individuals alike are trying to decode what really changes and what it means for them. To help us break this down and understand the real impact beyond the headlines, we are joined by Sumit Singhania from Deloitte, who brings deep expertise and practical insights into taxation and policy. Sumit, welcome to the show. It's great to have you with us. So let's begin. CBDT has invited inputs for simplification, litigation, reduction, compliance burden reduction, as well as obsolete rule identification. Now, how do you read this development?
This is a very progressive policy development. If you look back when the Income Tax Act 2025 was rolled out, an essential part of that legislation is income tax rules and set of forms that have to be sort of announced. Now the government has actually opened it out for public consultation, and this is actually for the first time, if you see, that the government is seeking public consultation at the very start of forming the tax rules and also drafting the tax forms. The important part of this exercise also is that this is actually furthering the principles of the simplicity and the broader ease of the administration in the tax law. In the current income tax, or rather the old Income Tax Act now, 1961 version, there were close to 510 income tax rules. In the new income tax rules that the government is proposing to carry out, there are literally 60% of those number of rules. So we have 310 rules. So that's a big simplification from 500 plus rules to bringing it down to 3 or 330 rules. Another important simplification is number of the tax forms which were there in the 1961 Act was close to 400. Number of tax forms now proposed are about 180 or 190. So that's a massive change and massive simplification if I would to look at that. Now also just from a content of these forms and the rules that have been laid out, there are areas where multiple forms have been consolidated into one. This actually makes the tax administration a little more transparent, and for taxpayer also the overall burden of compliance will come down significantly.
The government has taken significant measures towards rationalization and automation by way introduction of smart forms. How do you read this development from a user experience standpoint?
Again, this is a very positive change. Take an example of the recently notified safe harbor rule for ITS services. Now, in the old law, there were multiple forms for opting for the safe harbor. In the new proposal, there is a singular form for the safe harbor application, and it is a green channel for ITS company and a different form for non-ITS company. The way it's going to really pan out is the automation will lead to fewer steps in the compliances, and the forms will be very clearly identified with respect to IT and ITS services vis-a-vis the non-IT services. So that's one, I would say, significant step in the process of simplifying tax administration. There are other forms which have been made simpler in some way. One area where the government has gone ahead to strengthen the disclosure requirement is really on the transfer pricing documentation. If you recall, in the current law, as per the tax compliance rules, any company which is having the international transaction has to file an accountant certificate, which gives out its compliance with respect to the arm's length price. That form 3CV has now been replaced with a new form, and that has been significantly strengthened from the point of view of the disclosure.
The CBDT cites reduction in litigation. What specific areas of the old law do you see as important, prone to disputes under the new regime?
So I would call out one of the most litigious aspect of the tax law is transfer pricing. And I think the one major reform that government has carried out is by proposing more and more IT and ITES companies to come within the realm of the safe harbor. And that, to my mind, will be a major source of reduction in the tax litigation for taxpayers in India. If you look at close to 40% of the international transaction in India are essentially in the IT/ITES sector, right? And now with the revised, say, or rather newly introduced safe harbor rule, which allows IT/ITES company to go for a cost plus 15.5% safe harbor arm's length price range, or arm's length price actually, that should materially reduce the number of tax litigation across levels and across forums, whether the first appeal authority or tribunal or high court. That, to my mind, is a significant sort of, or will be a significant contributor to reduction into the tax litigation. There are other areas also. So, for example, from a fair valuation standpoint, the rules have been consolidated into one place. I'm hoping, and I would say that it's too early days to look at all the details of these rules, but I'm hoping that that will also bring down the litigation around the fair valuation of the assets like shares and other assets. But transfer pricing is one major chunk of the tax litigation, which should get materially, I would say, reduced if these rules are implemented in the true spirit as they've been laid out.